Good afternoon. Today is Monday, the 19th of December, 2011. Let's take a look at this market. It is Monday, so if you've been paying attention, you know that these are brought to you on by Realtic on Monday evenings. And if you're not using Realtic or familiar with them, go to realtic.com for a free trial of their software. It's the charting package that we're looking at here, as well as a complete trading platform with a lot of information on there. A lot of it which I don't use, but you can customize it to whatever you like. Obviously, the S&P 500 lost $1.30 today, as measured by the SPY, or a little bit more than 1%. And we gave up a level in here that was acting as support, near term at least. But we had been considering this as guilty till proven innocent, so it shouldn't have been a surprise that the market did break down through not only that 50% retracement level, but the lows from last Wednesday and Friday. You can see that that prior support level was tested intraday and did act as resistance right here at about 121.5. So 121.5 is a near-term level of potential resistance we're going to be want to be aware of tomorrow. And if it can get up through there, it's still going to be very difficult for this market to move higher, I think, because we are in this pronounced downtrend. But don't forget that we can get these turnarounds out of nowhere like we did last time, and we're down below the two-thirds retracement level. So officially, it's considered a failure of this attempted rally back here. And of course, that came from a failure of the 200-day moving average. Really, it remains a very mixed picture here for this market overall. Right now, as of today, for year to date, the S&P is down 4.5%, or just about 4.5%, and this morning what we saw was that little level had broken. And when that had broken, well, let's go back to a 10-minute time frame actually. That this level here was broken. That is the lows from last Wednesday and Friday. And when that occurred, then we had a little bit more that resistance set up, and then a nice flush into the close here. So the market got down to daily S2. That's where a lot of times when you see it break like that, you would expect it to at least test that level, and it's trying to stabilize there. But there's no sign of stability beyond this 1 minute time frame, and that's still below a declining volume weighted average price. So there's nothing indicating that this market's finding support or about to find support. We are at kind of an important level near this 120 area, and we've got this little trend line. So it's something to be aware of, but it doesn't mean that we want to look for a bounce in here necessarily. We have closed the gap. That's something that's considered important as well. I would think that the next potential levels would be first down here at about 119.80, and then really looking at about this level right here, about 118.90. So those are some levels to keep an eye on, and if they fail, then we've got this little hole to fill in as well. So we remain guilty till proven innocent, below a declining 5-day moving average, and all the same things we've been saying for the past week or so. The Nasdaq was down about 1% today, and that puts it in the negative column for the year to date, down about 1/4%. As you know, we've been kind of flirting back and forth above and below that level quite a bit this year. This is basically the closing level from last year. We've been above and below it quite a bit, so we're back below it now. And we're looking at this trend line as well that we've kind of been observing on the S&P 500. It's right down here at this 54 level. When we take a look at the Fibonacci in here, as we know, we've been holding along that two-thirds retracement level. Well, that gave up today, and that was basically the reason for the headline earlier today. That is, the more times that support is tested, the more likely it is that it's going to fail, that the buyers are going to get tired of taking in all the stock. The sellers are going to get more aggressive, and you're going to see shorts putting more pressure on the market as well. We did get down basically to the next level that we would expect to see maybe act as support, and that's basically 54.10 to 54.25. I didn't draw that properly, but this little band of prior support and resistance in here. And if this level fails, I think tomorrow we'd be looking for at least a test of 53.70, and possibly we could see a bigger sell-off. So there's nothing really here to get excited about. Definitely on the long side, it's supposedly a seasonally bullish time time of year, but obviously price action is indicating otherwise, that we're breaking support levels. We want to see it at least get back above 54.60 before we could think that maybe it could turn into something more. And this is really, 54.60 to 54.75. This little band of what was support should now offer resistance. And if it can get up through there, maybe we get a little bit more of a squeeze. But we've got all these prior, these lower highs and the declining 5-day moving average. It's going to make it very difficult for this market to make headway. So just, don't get too excited about any long side opportunities, I would say. The Russell 2000 starting to catch up a little bit on the downside. This market's been holding up better than the S&P and the Nasdaq and that. You can see that 70 is an important level. We're unable to get above that declining 10-day moving average, and over to the 30-minute time frame, we can see here that on this Fibonacci basis that we've been looking at from that November low to the December high, we're down at the 50% retracement level. And what we had happen in here is actually easier to see using a 10-minute time frame. When we look at the 10-minute time frame, you can see that we had this gap higher, it sold off, came down into this prior little level of support, and what we had actually in here was kind of interesting as well. If you take, since it started breaking down in here, the volume weighted average price of those 4 days basically was up at about 71.80. Well, we broke down through this little support level here later in the day, and then it came right down almost exactly to daily S2. So these pivot levels are important to watch, as well as the Fibonacci, because we closed at S2 and we closed at the 50% retracement. Further failure here would likely bring us down to the 70 level. 70, as we know, was this prior important level. It is the 2/3 retracement as well. Ideally, we'd like to see maybe a little bit of a strength in the morning and not see it get back above 71.90, and then look for the short side opportunity. And that would go true for the S&P and the Nasdaq as well. That we're looking for a short. We'd like to see fall short of or fail around that 54.50 to 54.60 level, shorted on some weakness, and then wait for that weakness basically for it to get back below the daily VWAP tomorrow, and that would possibly give us the opportunity for a short side trade. The semiconductors have broken this little trend line, and as we know, this group has been kind of the leader to the downside here lately. That they were the first to break that retracement level, that is the 2/3 Fibonacci, that they broke that a week and a half ago, or a week ago, I guess. And we did see a lower low in here today. This market, the semis, you could look at and say, well, maybe they're starting to neutralize a little bit, but even still, it just does not look bullish at all. In here, I think you want to keep an eye on at least 29.25 before you could think that maybe this could turn into something that would go up to a next important level, this prior support, which was resistance at about 29.75. But there's nothing bullish looking about any of these time frames on any of these markets. So caution is the best way to approach it. The financials had broken their 2/3 retracement as well today, and again, it shouldn't come as a surprise when we're below that declining 5-day moving average. What should come as a surprise is when we get these big gaps up that continue to rally, because that's a counter trend rally. Basically, we've got the bigger trend still lower, maybe trying to start to neutralize on the daily time frame. You could make that argument, but because the prior trend is lower, you still want to consider it guilty till proven innocent. Now the financials down at about $12.15 would be finding this prior resistance and that trend line. So maybe that's a level to keep an eye on tomorrow for a little bit of a bounce. But you can see that we're basically right on a 12.15, 12.20. If that fails to hold, this is the next obvious important level, this prior resistance at 12, which did become short-term support. And if that gives up, well, then 11.75 is next too. But again, we've got a pattern, a very clear pattern of lower highs and lower lows. So this isn't the time to be looking for those bullish arguments.